You know, from Reddit forums absolutely blowing up with meme stocks to the latest AI-driven trends, you've probably heard the buzz about penny stocks. They promise these explosive gains from teeny tiny investments. But is it really that simple? Okay, let's dive into this really fascinating and honestly often misunderstood corner of the market.
I mean, that's the multi-million-dollar question, isn't it? It's the dream that a few $100 can somehow magically turn into a fortune, like overnight. That one single idea is what pulls thousands and thousands of people into the wild world of penny stocks. So let's actually get to the bottom of it.
So here's how we're going to break it down. We'll start with the promise, the hype, and then figure out what we're even talking about. After that, we'll look at the seriously seductive upside and the brutal downside. We'll even check out a couple of real-world examples and wrap it all up with the most important takeaway for you.
All right, first up, let's talk about the promise. This is the part of the story that gets all the headlines, right? The incredible, almost unbelievable gains that seem to happen in the blink of an eye.
I mean, just look at this. On February 21st, a company called MicroAlgo saw its stock spike over 900% in a single day. It's stories just like this, born from that same wild energy as the whole meme stock craze, that just fuel the dream. It feels like winning the lottery. And, I mean, who doesn't want a ticket?
But okay, before we get totally carried away, we really need to be clear about what we're dealing with here. What is a penny stock exactly? Because, the name itself is a little misleading.
At its very core, it's just a stock that has a really low price. These are often smaller, less established companies that don't trade on the big exchanges you've heard of, like the New York Stock Exchange or the NASDAQ.
And what's really interesting is that the definition actually changes depending on where you are in the world. So in the US, the SEC says it's any stock trading under $5 a share. But over in the Indian market, it's usually thought of as stocks under, say, 20 or even 50 rupees. So the penny part is really more of a general category than a strict, hard rule.
So if they're so incredibly risky, why do people even trade them? Well, beyond that lottery ticket dream, some traders actually see some specific strategic advantages. So let's look at the seductive upside.
Well, for traders with smaller accounts, the math is pretty simple. It's a lot easier to double your money on a stock that goes from 50 cents to $1 than one that needs to go from $500 to $1,000. Plus, the big Wall Street firms, they tend to stay away, which means less competition. And sometimes these price moves can build over several days, giving you more chances to jump in. And of course, that insane volatility is exactly what they're looking for.
But, and this is a huge but, every single one of those pros has a dark side. And that leads us directly to the brutal downside. This is the reality check.
I want you to let this sink in for a moment. According to a veteran trader named Timothy Sykes, 99% of these companies ultimately fail. Let me say that again, 99%. That means if you approach this as a long-term investor, you are almost guaranteed to lose your money.
So here's the crucial part. That same volatility that creates those massive spikes, it can also create catastrophic losses just as fast. The low liquidity means you might get stuck holding a losing stock because there's literally no one to buy it from you. This market is also a breeding ground for pump and dump schemes and all sorts of other fraud. And just because a stock has high trading volume doesn't mean it's a healthy company. It just means there's a lot of hype.
Okay, let's make this a bit more concrete. We're going to look at a couple of real-world examples from the Indian market. Now, I have to be crystal clear here. This is for illustration only. This is not a recommendation to buy or sell anything. Got it? Good.
First up, we've got a company trying to tap into the massive AI boom. Avenues AI, which used to be called Infobeam Avenues, did a full rebrand to sharpen its focus on AI-driven payments. This is a classic move, A small company pivots to align itself with a hot market trend to grab investor attention.
And this slide right here shows the kind of data you'd be looking at. You can see projections for revenue and profit, and they're growing. But look closer at the net profit margin. See that? It's in the single digits. This gives you a quick snapshot of the company's actual financial health, beyond just the exciting AI story.
Now for a totally different example. NHPC is India's leading company for hydroelectric power generation. It's an established player in a really critical sector, but based on its share price, it can also be classified as a penny stock. This just goes to show you that they aren't all speculative little startups.
And when you look at their financials, you see a very, very different picture. The revenue growth is a bit more modest, sure, but look at that net profit margin. It's consistently high. This really highlights the huge difference between the types of companies that can all fall under the same penny stock umbrella.
Which brings us to our final and honestly our most important point. When you're looking at these stocks, what role are you playing? Are you a trader, an investor, or something else entirely?
And this, right here, is the core distinction. Trading is all about short-term price moves. You're betting on volatility and momentum, not the company's 10-year business plan. Investing is about fundamental value. You believe in the business and you plan to hold on for the long haul. And given that 99% of these companies fail, it's pretty clear which category they almost always fall into.
So the next time a friend or a forum post or some random person online tells you about a penny stock that's about to go to the moon, this is the question you absolutely have to ask yourself. Are you making a calculated trade with a specific strategy and a clear exit plan? Or are you just buying a lottery ticket and hoping for the best? Knowing the difference? Well, that's everything.